Hey everyone, welcome back to Corporate Decoder, the place where we unravel the mysteries of company filings and make sense of what really matters. Today, we're diving into Curbline Properties Corp. Its latest report, and let's just say it is all about some amendments to how they pay their top brass. This might sound a bit dry on the surface, but stick with me because even small changes in executive compensation can tell us a lot about a company's priorities and how they're planning for the future. We'll break down exactly what these changes mean and what they could signal for Curbline Properties Corp. So, Curbline Properties Corp filed this report back in September of 2025. Now, this is a massive financial deep dive like a 10K or 10Q, but it is an 8K, which means they're re-reporting some significant event. The biggest news here revolves around some adjustments to the employment agreements of their top executives. We're talking about the company's chief financial officer, the chief investment officer, and the general counsel and secretary. These are pretty key roles in any company, and their pay structures are always interesting to look at. What happened here is that the company's compensation committee, which is part of the board of directors overseeing how people are paid, decided to make a change. They're adjusting what is called performance-based equity awards. Now, what does that mean in plain English? It essentially means they're tweaking how much bonus stock or stock options the top executives can receive if the company hits certain targets. It's like a performance bonus, but paid in company stock. And here is the key detail. They're remaking the potential maximum payout for these three executives, the same as what the chief executive officer can earn. The report states this maximum is 250% of the target amount. So if the target is, say, $1 million worth of stock options, they could potentially earn up to $2.5 million if they absolutely knock it out of the park and achieve outstanding results. This suggests a move towards greater alignment between the rewards for these executives and the very top leadership. It signals that the board wants these critical officers to be highly motivated to achieve top-tier performance that would also benefit the CEO. This change is formalized through amendments to their existing employment agreements. These aren't brand new contracts, but rather modifications to the ones they already had from September of the previous year. The date of these amendments, the 26th of September 2025, is important because it is the earliest event date reported. This implies these changes took effect very close to that date. Now, this filing doesn't contain in-depth financial tables like a quarterly report, so we can do a deep dive into revenue growth or profit margins. However, we can analyze what this change in compensation structure tells us about Curbline Properties Corp. From a Warren Buffett perspective, we're really looking for companies with strong leadership and a clear strategy. In this case, the strategy seems to be about motivating key executives by linking their potential earnings directly to very high levels of performance. This can be a double-edged sword. On one hand, it can drive incredible results if those performance targets are ambitious but achievable and genuinely aligned with shareholder value. On the other hand, if the targets are set too high or the structure encourages excessive risk, taking to achieve those maximum payouts, it could lead to problems down the line. It's essentially saying to these executives, we want you to aim for the stars, and if you get there, you'll be very handsomely rewarded. The fact that they're aligning the maximums suggests the company is focused on pushing its top talent to achieve superior outcomes, and they are willing to incentivize that with significant potential rewards. This could be a sign of confidence from the board that these executives can deliver exceptional value. However, it also means that a larger portion of their compensation is now variable and directly tied to performance metrics that are not detailed in this specific filing. We need to look at other documents or company disclosures to understand what those specific performance metrics are. Are they focused on growth, profitability, market share, or something else entirely? The company is listed on the New York Stock Exchange under the ticker symbol CURB. It is interesting to see that they've elected to be treated as an emerging growth company, and they've also chosen not to use the extended transition period for complying with new or revised financial accounting standards. This is a common choice for newer companies as it allows them to phase in new accounting rules, but by opting out they signal a readiness to adopt the latest standards quickly, which can suggest a focus on transparency and being on the cutting edge of financial reporting. What does this tell us about Curbline Properties Corp? Well, it indicates a focus on performance-driven culture at the executive level. They are tying significant potential compensation to achieving outstanding results. This can be a powerful motivator. We need to remember that while this filing is about compensation adjustments, the underlying performance of the company is what truly matters. If Curbline Properties Corp is performing well and these executives are driving that success, then this compensation structure makes a lot of sense. If the company is struggling, then increasing the potential upside for executives without clear corresponding improvements in fundamental business metrics could raise eyebrows. For now, the story here is about aligning incentives at the very top of Curbline Properties Corp. It is a signal that the company is setting a high bar for its leaders and is prepared to reward them significantly if they meet or exceed those challenging goals. It is a move that could foster a highly motivated executive team, but it also puts a spotlight on the company's ability to set and achieve ambitious performance targets. Alright, that is our quick decode of Curbline Properties Corp. S8K. What is your take on these compensation amendments? Do you think tying executive pay to such high maximums is a smart move for driving performance, or does it create too much risk? Drop your thoughts in the comments below. If you found this breakdown helpful, please hit that like button and subscribe for more corporate insights. And don't forget to join our Discord community. The link is in the description. Thanks for watching, and I'll see you in the next decode.